The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All righty, folks. Welcome on back here to the Diagnostic Trading Hour right here on TFNN.com. And let's check where the markets are right now. We got the S&P is currently down 20 points. We currently have the Russell down 12 and the NASDAQ down 55, along with the Dow down 213 points. And, just a massive, amazing moves. Got to love that. And let's see here. All right. We got the metals markets currently. We got copper down there with 1%. We got silver down about 0.5%. Gold is moving solid right now. It's down or up right now, 0.4. So gold's up 0.4, silver up 1.4%. And just those little red numbers, got to watch it. We got oil right now is up 1% on the day, up $1 even at the moment. Natural gas flat on the day. Looking over at our ags, we got corn is currently up 0.7 with soybeans up 0.5% on the day. Pound dollar, currently looking at that, it's down 24 pips. We got the euro dollar down 20 and the euro pound down 11 pips on the day. And looking at a couple other currency pairs for you, we got the dollar franc is currently up 24. We got the dollar yen down 28. The euro yen's down 67. And the Aussie yen down 63. Lots of volatility. It doesn't matter what sandbox you're playing in. There's a lot going on. Looking on over here at the bonds. We got the bonds currently flying up. King dollar ruling supreme up over 1% on the day. That is a massive, massive bond move day. And looking at the dollar index itself, it's up not quite as much, but still some massive bond moves right there. A lot of flights of fear going on. All right, well, that gets us caught up. And let me see what else we have. But, yeah, that'll get us caught up on the day right now. The next thing we need to do is go over here and let me look at just some of the charts, do a little catch-up. That gives us a quick overview. But just looking at this morning, lots of good trades that you could have taken advantage of. So let me put them on up here. We'll look at them. And we got the Russell just flying on up right there. So really interesting seeing those bonds rise with that, and just all the pieces coming in together, but not your normal combination of the bond market with the indexes both flying up at the same time like that. And then let me go over here and pull up a couple more things. Let's see, that Russell contract. Oh, that's oil. I'm like, that does not even make sense. We got oil right now. It is up $1 even. And so we got apex entries here, 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 and here. You had momentum scalps the entire morning going up with it. And I just had a mislabel on my chart. That's why I have that up. And then we go over at the NASDAQ, downward trend with momentum going on. And some solid movement down to, guess where are we down to? We're down to a 1 deviation move. We got a great deviation bounce going on over here on the S&P. And if I pull that up, you can see it hit right down at the 1 deviation, bouncing up at 0.5, pulling back down right here. And it's making great deviation moves. So as big as these moves are, they're not like unheard of deviation moves. Right here we got the Russell. It's down. And we look at the deviation move on it. It actually is pretty much right at a 1 deviation, 0.969 deviation move down for the day. Even though we're not down at the 1, we moved up a little bit in the early hours, late hours last night, whatever. Then we pulled on back down. So we did move down that 1 deviation before pulling on back up. So hopefully you're catching some of these just massive, fantastic moves. We got the DAX going on. It moved on down. It actually busted on through. We talked about looking at the DAX moving on down. It moved down pretty solid right there. And not only hit the 1 deviation marker, but even decided to bust through a little bit down to 1.5, sitting back up at 1 deviation right now. Gold Been a little choppy and range bound. Had some decent scalping opportunities in the process. Some good profit poppers going on as well. But, overall, I mean, it's trending. It's trending up. It's just really chop trending in the process. So not as smooth as I'd like to see. Silver, it has just been beautiful, flying on up there. You can see this just great MVP reversals right there. We got multiple elite entries. We have momentum scalps just riding the wave all the way up and passing the one deviation marker right now. Aussie dollar had some beautiful move last night on the 10-minute MVP there, and just a great move down. Started early, and pretty much like right after the market opened, hopped in there. You could have hopped in. You got a great MVP entry going short, and just took it down all night right there until about 1 a.m., and just a great move. And right there on the news of retail sales. We got the yen had some nice moves as well, and euro yen right here. And we see this just pop down right here on the news, and just some solid movements. But we had a good little trend up, and then we had a good trend right back. Well, not even a trend, really. That's more of a fly back down. But we did get the early warning to go ahead and go short on that. Tight on into the dollar CAD. The dollar CAD over here. Going and look at it, we had a nice little trend up, and then we had a nice little trend back down, and just, some decent moves. So overall, some great nighttime trades. One thing I want to remind you about is you can trade at night on Nadex. There's plenty of nighttime trading opportunities. And, there's FX all night long. They have not only the binaries that have 24-hour expirations, 2-hour expirations, they're coming out every single hour for new 2-hour expirations. So basically an hour expiration all the way out to a 23-hour expiration, even the weeklies. But mainly, there's nighttime and dailies. And a lot of times people focus on the 3 a.m.s and stuff when they're trading them. Gives them more than enough time. But you also have the spreads happening every hour at night on the FX pairs. And FX, that's on every FX pair on the spreads. Every hour a new spread comes out. And at least out of the 8 of the 10th they have spreads on. And so, you can get a lot of good movements at night on FX. And we're starting to get a lot of good movements again. It's sort of, backed off for a little summer doldrums, but volatility has returned. And so something to definitely check out. There's a lot of news this week. I talked about it. I spent an entire hour, like almost speed reading through the news last Friday. And I'm talking about how much news is going on. So it could be a really great way to help you hop in, potentially pull it out the end to win that TFNN contest. We got some traders just knocking it out of the park. And had some, great, I know a lot of y'all have already got called up, and you got selected to win. So congratulations on that. And there's only a couple days left. So give some props to people who are out there, making it happen already. If I hop on over to TFNN, I'll show you where you can follow along and see how everybody is doing on this contest. Let me see here. Go back up and grab that. And you'll see, you got some people going in and just really, really knocking it out of the park. And 929, 930, the leaderboard. We got, W. Burgess right there knocking it out. I even talked to him last night, so I know a few of these traders on these lists and what they're doing and how they're doing it, and they're doing fantastic. So totally congratulations to them for putting a plan together and executing that plan. And, he started out a little bit low, and he climbed right up there. So looking over at the daily winners, we got, people being drawn. And remember, as long as you place a trade, if you're in the demo contest and you place a trade in the demo account for the demo contest, your demo contest account for the virtual trading competition, then you'll be you'll be entered to be potentially selected to be one of 5 people. They'll do a random drawing, and this has nothing to do with performance on the random drawing. It just has to be if you traded that day. And they'll pull out 5 people that day, and they'll give them $100, and they'll give them a copy of Tommy O'Brien's book. So not too shabby just for showing up, And but some nice prices. I know some people trying to win that $3,000 cash and $1,500 cash and $750, $500, $1,500 cash. So lots of good prizes right there. And I wish the best to all of you. Keep it up. You got a couple days after today left to finish out strong. And it'll be interesting to see. We'll see. It's interesting to see some of the volatility that happens. And I'm hoping to see some people just really knock it out of the park, especially those that I know, and maybe meet a few that I don't know. So if you have any questions, make sure you give us a call here up at TFNN. We'll be happy to help you out on that. But great job to everybody in the virtual trading competition. Lots of fun, and I like to do it, every year, and going very well. All right, so that wraps up a little competition highlight, and again, some people knocking it out of the park. One thing we talk about often is the VIX and how that really impacts your ability to trade any kind of option. So let me go ahead and pull the VIX on up over here, and let's look at it. And you can see how the VIX is really climbing up. This is adding a lot of premium and making in-the-money trades a lot easier to do. It's making premium collection a lot easier to do. You can get stuff now that used to be 2 ticks away. Now you can get it more for like 2, 3, 4 points away. So the trades are just getting better and better and better as this implied volatility climbs. So I hope to see it continue to climb. We are getting up on the VIX at, you can say sort of a support, resistance level over here. Hopefully we'll break on through that. And the VIX, in case you don't know what it is, the VIX is the measurement of the implied volatility of the S&P 500 index, the SPX. Okay? And so what they do is they take the implied volatility of the at-the-money call and put options from the front and back month. They average those 4 implied volatilities. So at-the-money calls of the front month and puts from the front month, at-the-money calls from the back month, at-the-money puts from the back month. They pull the implied volatility out of each number, they average that, and you get the VIX. And that basically lets you know how much additional option buying is happening. As more demand comes under pressure for buying the options, that basically means, hey, there's a lot more fear that movement's going to be happening. People either buying calls because they think it's going to fly, may fly up and they're short, or they may be buying puts, usually is the case, because they think it's going to fly down and they have longs and they're trying to hedge it off. So a lot of hedging starts taking place. Traders start getting more involved because they see more volatility, so therefore they just start placing more trades, period. Even if it doesn't have anything to do with hedging, just more people start piling in when the volatility picks up. So as that volatility expectation rises, then that is seen in the VIX. We don't use the VIX, but we use this kind of number in order to calculate our own deviation levels. And because this is the market's expectation of how far the market will move. And we've seen lows this year on the VIX. I think we might see some highs. And hopefully we'll break, not high highs of ever highs, but I don't think we'll have like 2008 highs. But I'm hoping we'll see some big, massive moves. I mean, just looking for the last few years, we're already busting out earlier in the year. And so, volatility, if you just look at that, I mean, it really, going up, that's a weekly, chart there on the 10 minutes. We go back to daily and we go to weekly. And there we go. That's a little better view for you. So, we've been really low for a couple of years here. And if we can finally break above about 22, 23, then maybe we'll reverse that trend. We'll get to see some continued increase in implied volatility. And it just makes the markets more interesting. There's a lot more opportunities to make cash a lot faster. Some people may go, well, that means a lot more opportunities to lose cash a lot faster. Well, it depends upon what you're using. Are you using defined risk products or not? That's why I love Nadex. Got defined risk. It gives me a lot of opportunity to make money in fast markets with defined risk. Don't stay right there. We'll be back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. And, we talk about the VIX rising on up and a lot of the uncertainty going on with that. We also have the dollar index really moving higher, and well over 5% now. Historically, you can look back, we've seen rallies as strong as 20% in the U.S. dollar. And this one's a little bit different than other rallies we've had. There's definitely a deflationary tone to it, but if the economy can pick up enough, then maybe it can have its own internal inflation. But a lot of it has come down to the needed inflation in other nations. As our dollar gets stronger, theirs gets weaker, therefore their currency gets inflated. It takes more of their currency to buy something that inflates their currency, making it weaker, which is weird, but they want weaker currency. They want inflation. And I mean, it makes sense, but on first glance, it doesn't. And so this rally is basically, this dollar rally, a lot of it has to do with the needed impact internationally. And, countries chipping in to try to make this happen every way that they can. Whether that's going to be enough and whether or not the U.S. government's going to put up with that, who knows? Policymakers, who knows where that's going to go? They may go in. They may just say, hey, we need to go ahead and inflate this a little bit more. But they keep backing stuff off and talking about raising interest rates. Well, when you talk about raising interest rates, when you talk about, backing off more and more of the, pumping the money out there, that is going to increase the strength. But also you balance that out with all the weakness policies happening everywhere else where they're doing the exact opposite. They're lowering interest rates. They're printing more money out. So that's going to make theirs, basically more inflated, make ours more deflated or stronger. Deflation actually means stronger currency. And anyway, I don't know if it's going to be something that's going to help solve all the different, problems out there, but it definitely can, will help them out. The interesting thing here is this is not really one that is a deficit issue. It's just it's all the different policies coming in. Let's see, a couple of the quotes I've seen. I've been looking at, different articles on this. And one of them is, reviving exports is a secondary objective. The reality is international economies are trying to revive exports dramatically. They're basically trying to, this is a currency where we're stealing inflation rather than growth is the goal. And so it's really interesting. They're literally trying to go in and increase their exports to stave off deflation and prevent the inflation expectations from becoming de-anchored, meaning that they're trying to make it where people that are maybe potentially expecting inflation, they want to make sure they see it happen. And so they're trying to export like crazy to the U.S. economy and hoping the U.S. economy will buy that stuff up like crazy to help increase inflation here as people buy. We'll see if that plan comes together, but it's definitely going to cause some turmoil. And it's a different dollar rally, but it's one that could go a whole lot further than what we've seen thus far. And just, backing off, I mean, dollars has been getting stronger and stronger and stronger. But hopefully, all the economies will work out, but we're traders. And what we do is we hop in and we take advantage of volatility in the marketplace day in and day out. We're busting up new highs on the year, really highs over the last several years, and we have a potential to do really well. I'm trying to see if I can get this to load up the amount of data I want. There we go. That's what I was wanting. Okay. So just to look at it, where was the dollar? Before we had the dollar index, it was up at 121, okay? All the way up at 121 back in May of 2001. So May, April, actually moved June. So when we hit that peak. So yeah, June of 2001, we were up at 121, and we're up at, a mere 86 right now. So the ability to bust out of that, we have to break out of 2010 highs. We're going to have to break out of 2008 highs. We break those two highs, then the dollar index could go flying on up. And so that's something, if you haven't learned how to trade that, I love trading the DX, by the way. It's one of my favorite futures to trade. If you haven't learned how to trade that one, might be one you want to dive into. And pretty cool instrument. All right. So, just trying to go through a little bit different topics for you here today. And anyways, it's, obviously if this dollar grows, that's going to impact, oil, that's going to impact gold. It's going to impact, the bonds and the FX markets. So there's going to be a lot of impacts all over the place. I'd be watching DX while I'm watching everything else I'm trading. All right. We had a couple iron condors this morning, and we have a couple more coming up tonight. And so let's go to that. And we have a couple more tomorrow morning. But let me pull on up and go into our news trading plan. I'll do that when we get back after this break. Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back here to the Diagnostic Trading Hour, and I believe we have another winner for the TFNN Nadex Virtual Trading Competition. Nathan Young, are you on the line? Hello? What was that?
Can you hear me?
Yeah, there you are. All right. It sounded like somebody beamed somebody down from a spaceship or something. All right, man. Well, you are a winner of the TFNN Nadex Virtual Trading Competition. You just won $100 and a copy of Tommy O'Brien's book. Congratulations.
Thank you.
You bet, man. So you having fun in the competition?
Yeah, it's actually really interesting. I follow your guys' website. I saw it, and that was the first time that I've seen any Nadex platform competition, so I was really interested when I saw it. And yeah, it's been going well so far. It's crazy to see some of the profits on these leaderboards. It's amazing to see some of the margins on that.
Yeah, I mean, it's people going in and knocking it out of the park. So, but
yeah.
It shows you, I mean, you can get quite a bit of volatility even with a small instrument, right? So, it can work pretty well.
Yeah, exactly. And with the markets down right now, we got Dow down 233. So, I mean, it's just crazy volatile right now.
Yeah, who knows what's going to be popping up on those leaderboards after today, right?
Yeah, either wiped a lot of people out or a lot of people got rich.
Exactly. So cash rich. Just now, if you can just figure out how to do a withdrawal from that demo account, then you'd be...
Yeah, right?
So for some reason, they seem to disable that feature. But hopefully,
maybe we
you
can
can
work
withdraw
on
some
that.
real cash right here at the drawing today, and hopefully you'll knock out the competition, and at the end of the week, maybe withdraw on some more cash. So,
Yeah, maybe.
but congratulations. Keep up the great work.
Thank you very much, Darrell.
You bet, man. You have a great day.
You too.
Awesome. So remember, keep on trading every day, and putting trades in on those trading competitions. We're pulling 5 people randomly, get a $100 prize, cash, real cash, and so some withdrawable cash right there, right? And then a copy of Tommy O'Brien's book, 5 of those every day, just for placing a trade. And then we'll be looking at the big prizes. We'll tally the results at the end of the week, and looking to hopefully announce the results on Monday. But anyway, some really, really good stuff, and just a lot of fun. All right, so we got a couple reports tonight. We got building approvals and trade balance coming out. Lots of volatility going on. And so let's check it out. Let's look at those and pull them up. And we'll talk about what the trades are so that way you can be ready for them. We'll also review a couple trades in the process. And let me go ahead and pull them on over here. And we'll look at the ones that we were focusing on. So bring it on back to today. China had its holiday. U.S. manufacturing PMI came out at 315. Pound manufacturing PMI came out at 430. Saw some good moves on those. Usually not news trades, but definitely had the volatility on them. I don't know if you were watching them, but if you hop over and you look at the euro and all that stuff, there's, like I said, we had some good moves, especially like the euro yen and things like that in the process. And all right, so let's back up. Let's look at. So those are the trades from last night where I was like, hey, be aware. We did get some good moves on them. All right, we back on into this morning, and we were looking at the ADP NFP report coming on out between 8 and 10. And let's measure the news and releases on that. So we go from 8, we take it on over to 10 o'clock. So we got 19 pips. We had an expectation of 30 pips or less. We were less than that. Therefore, the trade was profitable if you were able to get filled on that trade. It did give a nice oscillation up and down, so you should have been able to wing into that trade or leg into the wings on that trade. Without a problem. So 8 to 10 a.m., Iron Condor and U.S. NFP worked out fabulous. We go on in, we get the U.S. ISM. They got a little bit hectic there, but when it all settled down, was all settled and done, it looks like it's okay. Hopping in at 9, looking at an 11 a.m. And again, another 19 pips. We look at that high. That high went pretty high up. It's 26. You go high to low. We had a big move high to low, which can be deceiving. 50 pips. And I've seen sites before. I've used to look at them. I'm like, oh, man, there's a 50-pip move on that on high to low and da-da-da-da. Well, that doesn't help you on a strangle because it could be 25 up and 20 down, 25 up, 25 down. So from the same point, therefore, it really wasn't a 50-pip up move. And that's why I've been so particular on, going in and really looking at each one of these things step by step. We're looking for 25 pips on it. We got a 19 on it. That means we took a 6-pip profit out of the trade. About a 20% profit on the trade. Not a bad trade. All right, well, that wraps up the U.S. ISM. Now, last night was a little bit nuts, but we also got tonight, we got Aussie retail sales. I'll show you that, what's going on. And a little bit larger moves than usual on the retail sales. And we do usually get a couple big moves a year, okay? And on all these reports, we expect a couple of the moves to take off. And one of them definitely did last night, so we got a big move on that. But what about tonight? Tonight, a little bit different. It's the building approvals. It's not near as impactful as the retail sales. We're looking at a 9 to 11. Let me pull that report right on up for you. We'll get the details going. We're going to get 9 for an 11 o'clock expiration. We're looking for a minimum profit of $35 on the trade. And again, even last night, you may have had a hard time finding that fill, but if you could, then that's awesome. Because you might even pull off a strangle. If you find it to be too cheap, remember, and that's one thing I always try to remind people of. If you go in and you look for these condors and they're just way too cheap, sometimes you can pull off a pretty sweet strangle, okay, or a straddle on the trade. So don't forget to look at both sides of the coin. I'm showing you one potential way to do the trade. I don't know what the pricing is going to be when we get there. I just know what the average movement is, and that's where that 35 pips comes from. So we're looking at a 35 pip amount we want to bring in. We want to enter at 9 o'clock for an 11 o'clock expiration on the Aussie dollar, trading on Nadex, buying the lower spread and selling the upper spread. That's an Iron Condor on Nadex. We also have pound construction PMI coming on out. And on that one, we're looking to, again, buy the lower spread, sell the upper spread, area at 11 for a 7 a.m. expiration. And this one, usually, you'd think big, but really not that big of a move normally. And so pulling that one up, we're looking for literally just a mere 30 pips in profit on it. Let me see here. If we go in, look at that pound PMI. Let me back on over here. And there we go. So pound PMI. We can look back at some of the previous reports and see how they've done on this. Going in and grabbing them right now. And, yeah, so pretty consistently we've been going in. Sometimes wider, sometimes narrower. Looks like we've widened it out a little bit on this one. But just to look at maybe like the last one right before that. And the date seems to vary quite a bit on this report. And so, yeah, we've went anywhere from $20 to $35 on the report, just depending upon what's going on with it. And so looking at the one coming up for tonight, for tomorrow, really, I mean, it comes out, we enter it tonight at 11 for tomorrow's release. We're looking at $30. So again, 11 p.m. entry for a 7 a.m. expiration on the pound PMI that's released at 4:30 Eastern Time, and looking for a $30 minimum profit on that trade. All right. Well, that gets you caught up on that. Now, what do we got going on tomorrow morning? We have a lot happening tomorrow morning as well. That's really important that you want to be aware of. We got Spanish unemployment change coming out. That could have a little bit of an impact. It's not going to be the major news of the evening, but we could see a little impact on that if the number's really off from the expectations. Other thing, we got the euro minimum bid rate will be released tomorrow. So that's a huge thing. Now, last time they shocked us, okay? If we go in, pull this on up, we got a little surprise from them, and that does happen now and then from the euro. But looking at the minimum bid rate in the morning, there we go. And we open that on up. They expected it to stay at 0.15. It dropped down to 0.05. That's that inflation thing that I was talking about earlier. This is the king dollar moves that have been happening, okay? The expectation is that they won't be lowering it again on this report. They'll save that for a little bit. But that's a pretty massive rate lowering. And so that was a shocker on it. We haven't had one of those for quite a while out of the euro. But they even raised it once. They went in and they took it from 0.1 to 0.15, and this time they're like, you know what, let's just go back down to 0.05. And so, I mean, they're just swinging that thing all over the place. But right now the expectation is for it to stay at 0.05. That's the lowest they've had in a long time. They're really trying to fight that inflation. And so we expect little to no surprise movement, at least to begin with. Okay, so it comes out at 7:45. So from 7 to 9 before the press conference, this is so huge, before the press conference, 7 to 9, okay, we're looking for an iron condor on the trade for about $30. And we usually don't see the thing move at all. I've seen people even going into a 6 to 8 because it comes out at 7:45. You know, it's your choice. But big thing is that 7:45 is when that release comes out. And I usually do a 7 to 9. I'm usually not up at 6 anyway. So 7 to 9, $30 minimum profit iron condor, looking for it to be very neutral and not move. Now, when that news comes out, all right, then we're looking for a straddle. And you actually could enter as early as 7 o'clock on this if you wanted to, because this is a longer term one. We're looking at, notice how we're going for the 3 o'clock. 3 o'clock for a straddle. We're going to have $45 maximum risk. That means we're looking to buy the upper spread, sell the lower spread for no more than $45. And this is on the press conference. It comes out in 2 parts, lasts about an hour. It'll begin up at 8:30 and then go to about 9:30 to 10 o'clock. And we just want, and a lot of times that'll happen, and it'll just keep drifting all day. Okay? So that is definitely a trade that we're going to take advantage of. I go in, I do the iron condor before it, I do the straddle right after it, and usually both of them work out very well. We'll also have U.S. unemployment claims. That's going to be highly overshadowed by the press conference. So you can look for, volume spikes and things of that sort on various markets. Let me see here. Pull this up. I just want to put a note down on this one for myself for future reference. And there we go. All right. So I put this on the euro, but you can do it on anything. So basically, you don't have to do it just on euro. All right. But you could look at spike triggers on S&P, on U.S. yen, on gold, on a variety of things whenever these additional reports come out. Okay. All right. So that covers us on that one. And then what else do we have tomorrow going on? We're going to have the U.S. factory orders that'll come out at 10. Be aware of that. Usually not a big thing to, do there. We got, let's see, we're also going to look at our weekly natural gas inventories. So that'll come on out. Obviously, we'll be trading natural gas on that. And I got some good ranges there that we can trade for it. Hey, let me see. I could probably pull up a report for you real quick. Let me do this. And we'll go in. We'll throw on expected ranges. Okay. Switch this back on over to natural gas, and then we'll export out and find out what the expected range is for tomorrow for you on the natural gas report. So that way you can help potentially do a condor or a straddle or a strangle or a butterfly, lots of variety of different trades that you can do. And if I export that, I'm scrolling down to Thursday, and I look for the 10 to 11. You can definitely see where that news report comes out. We're looking at about 91 pips, okay? So around 90 pips of movement point, or 0.091, sorry. But it's not exactly pips, or ticks. It's just 0.091 is the expected movement on the inventory report from 10 to 11. So you can use that to help you devise, hey, how far we expect it to move. Could I get in and get out of a straddle before it hits there? Or is it so expensive that an iron condor is a no-brainer for me? And that's the expected movement. It's not exactly the expected, close to close on it, okay? And let's see here. I don't know if let's see if it'll do this. If I go and add an expected range again. But what I'll do is I'll make it give me the close to close. See how much it usually pulls back, okay? And we could also export that report out. And there we go. Scroll on down. It's Wednesday, 10 to 11. And, it pulls way back. So almost goes to flat. So very, very important whenever you're... the Thursday. What? So, yeah, it still pulls way back. You're pulled back 40-something, which is usually larger than most movements on most hours. So we're talking about going from 90 all the way back to 50 in the move on natural gas. So keep that in mind. That helps you out when you're doing a neutral strategy like a butterfly or like a iron butterfly and iron condor. And it emphasizes the point on the straddles or strangles of needing to take that profit because you should expect it to fall on back inside that range. Okay? And you can sort of see if you look at most days, most hours, how it'll go out and come back inside the range. If I thin out, so it comes out and it comes back inside that close to close, little darker channel right there. So when it does break out, we usually see it pull on back in. Some hours, obviously, it's not going to do it every hour. It's just the average close of 1 hour to close of the next hour. All right, so that gives us a little summary on the natural gas report there. We got China manufactured PMI coming out. That can, of course, impact our Aussie and yen pairs. That'll be released at 9 o'clock tomorrow night. We got the Euro retail sales at 5 a.m. That's going to give us another iron condor. That's for Thursday going into Friday, entering at Thursday at 11 o'clock for a 7 a.m. expiration. Remember, get these things lined up for potentially doing on your, at least using the expected movements here to be able to do on your trading competition. All right, y'all stay there. We'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this prospectus and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. So we were wrapping up there talking about the Euro retail sales 5 a.m. release, and we're looking at going in on a trade with an 11 p.m. expiration or 11 p.m. entry, 7 a.m. expiration for a $25 minimum profit on the trade. We'll go on over at the U.S. unemployment rate. This is going to be our big thing. We got the unemployment and the NFP coming out. Definitely going to be the big trades for the week. And we'll go over this today and again tomorrow. Make sure you have it down, okay? We're looking at iron condors. We're basing this on the ranges we've seen over the past 12 months. And you may decide to do straddles instead of condors, just depending upon what the pricing is. So we got the range over the last couple years, and we also have the last 12 releases minimum profit target, okay? So Aussie dollar, range has been about 60 ticks. We went about 50. Now, range means high to low. It may come on back in, which is what we're expecting, all right? So Aussie dollar, the range we expect, 60 ticks. We're looking for a $50 minimum profit. Euro dollar, 100 ticks. 60 pip minimum profit. Pound dollar, 100 tick expected move. 70 pip minimum profit. Dollar CAD, 75 pips in movement expected. We're wanting to get at least a 60 pip minimum profit. Expecting it to bust out and pull on back in. Dollar franc, 92. We're looking to get ideally somewhere around a 60 pip minimum profit. Okay, you may decide to go with a little less. Okay, maybe you'll get more. So I'm just trying to lay out the the ideal scenario for you. Dollar yen, 80 pip expected move on NFP. You may get 60 pips minimum profit. Okay. No, you can go in. You can straddle these. I've talked about this before. I just want to keep reiterating this because it's such a big report. And we got the minimum profit pips. So if you can pull off a straddle taking a profit at 1-to-1, then that's great. You can look at 9, a 10, or a 3 because usually most of the movement happens out of the gate. And I've actually got many trades on where I've been able to take a 3 o'clock for like 5 or 10 more pips total. Completely worth it. And definitely paid off. Pay a lot of attention to those deviation levels. We publish them every day at 8:15, okay? Every day we're publishing those out. And let's see here. What else do we got? You got the advanced straddles that you can do as well. So you can go to the synthetic Euro CAD. You can go to the pound CAD. The market moves 100, 150 pips on the pairs. The biggest movers usually are the Euro CAD and the pound CAD. I don't mean I go in and I trade them with FX, but I could go in and trade them with Nadex and go in and be able to, like I said, do a straddle on them. I'd go in, I'd buy Euro dollar, I'd buy a dollar CAD for my upper spread on a Euro CAD. I'd sell a lower Euro dollar and sell a lower dollar CAD for my lower spread on Euro CAD. Likewise, I'd buy, pound dollar and dollar CAD, and then I would also sell a lower spread pound dollar, dollar CAD. Breaks in either direction. While I'm doing this, I need to watch the Euro CAD or the pound CAD chart to be able to manage my trade and know when to get out. Because trying to look at the other two charts is just going to be way too confusing, okay? The net result will be the same, okay? Again, 90% of the time, the biggest move that happens on FP happens in the first 15 minutes. Every once in a while, we will see it just creep on up and actually make a pretty stellar big move. But most of the time, it's in that first 15 minutes after NFP is released and unemployment along with it. Again, even on the synthetic straddles, you can do a 9, a 10, or a 3 o'clock expiration. And, of course, if you're doing a 10 o'clock, you can enter at 8. 8. So if you're doing the 9 o'clock, you can enter as early as 7. Up to 8, of course, the announcement's coming out. You want to really be, between 7 and 8:15 is really the latest time you want to be in that trade. And, all right, y'all have a great day, and I'll see you here tomorrow right here on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.